Stock market update for the week of 20th of February 2023. You won't want to miss this, so get ready, grab a pen and paper for this one. Grab your ankles as well somewhat. Let's get on with it, and let's get on with how the market's looking. Well, it's still looking a little bit expensive. Look at that. Those are price to earnings ratios. It's not the only way in measuring the valuation of a company, but you can see energy, as has been the case for months on end, looks relatively cheap, and that's because of the bumper profits those companies are making compared to their share prices. However, I think a lot of people, myself included, have started taking those profits and gains that they've had in the stock prices and putting the money into some of the beaten down stocks which have been undervalued from last year. For instance, I own JPMorgan. Now, performance. Well, it was a pretty good week last week. How does it look for the week ahead? What are the bellwethers doing? I'll come to that in just a second. But if you look at the performance of these companies, you can see overall we had a heck of a lot of green. Healthcare came off a little bit. Should do well this year actually overall, so don't read too much into just 1 week. Price earnings growth ratios, which measure the share price relative to the rate at which profits are growing, should be under 1 if the company's undervalued. Again, energy seems to be the only one there which meets that criteria. Now, far more importantly, let's look at the S&P 500 and where we are. There's a lot of expectation, myself included, that we're about probably to have some profit taking given the recent rises we had, some profit taking and sit back a little bit maybe for this week as well. If you look at the monthly MACD, it's flat. And that suggests still some degree of neutrality, which is what allows that to fall back a little bit, as shown by the weekly stochastic. If you don't like technicals, don't worry. It's profit taking to you and I in any other language. But that's what I'm expecting to happen, but I won't panic because, like I said, overall, the trend will most probably be like this for the rest of the year. So after a little bit of profit taking, I suspect something like this. Apple. Well, good news for this, and I own Apple, is again flat like the S&P, of which it's an important constituent, and the price has bumped up. It's now within this channel, and it'll probably stay within there for the rest of the year, which is positive and good news. Microsoft has escaped that downward channel, and again, looks relative positive, should do something like that. So I think even if it goes down, that's what I'm looking at as projections for Microsoft, and I have 2 times leverage on the exchange traded funds. Before I continue, let me remind you, don't forget to subscribe, like, share, comment. On my TikTok channel, I have 100,000 followers. Let's do the same for YouTube, shall we? Where are we on Amazon? Well, Amazon obviously fell off a couple of cliffs actually. And then it seems to have bounced back, but it's got this downward trend. Now, whilst I continue holding Amazon, as long as it stays somewhere along this line, I should within the year get a 53% return. Actually, I'm lying. I should get a 100% return because I have 2 times leverage on that one. PayPal. Oh, what a stinker. I did not expect it to drop that much. It went down 77%. Now it looks like it'll go along here, and we're looking at a 42% return over the next couple of years as it slowly climbs out from the absolute drumming it got. Adobe, downward trend. Monthly MACD flat to rising. Price has already moved up, broken outside that downward trend. That's the direction of travel, keeping it simple. Of course, on my approved filtered list, we look at the fundamentals of all of these: valuation, revenue growth, dividend yields. This is just a simplified version of what is going on. Warner Brothers I also own, and good bellwether. I suspect that will happen. It's already started. Pretty much broken out of the downward trend. I also own Disney. There's the projection there. Okay, I'm expecting about 100% return in a year. Will I get it? Well, actually, I'll be happy with 40%, which is the hurdle rate for my investments in my SIP and pension. But were it to go back to highs of 2021, then that would give me the 100% return. Like I said, I'll be happy with 40. Taiwan Semiconductors. There we go. That goes up there. That's the upward trend. That's flat. That's going that way. The fundamentals, more importantly, as I look at them on my approved filtered list, they look good. So that's why Taiwan Semi is not one which I'm particularly worried about. I own, and it's been going up nicely. Nvidia. Now, you might look at the narrative and say, oh, Nvidia, is that because of ChatGPT and processing power needed? Well, I look at the data first. In social media, in life, and in stock picking, look at the data first and the narrative second. Narratives are often, as in life and social media, full of crap. Data usually isn't, okay, unless it's from dubious sources. So when we look at the data from Nvidia, what we find on evaluation, its profitability, to its share price, to its revenue growth, to its cash flow, is, well, that's the projection, and I'm doing very well so far this year. Thank you very much, Nvidia. Another little bellwether to share with you, JPMorgan Chase. That's the direction. They all have to meet my 40% minimum hurdle. If they don't do that, I'm not interested. Another popular one for you kids, Tesla, which, as you know, I got into on a special situation. It didn't make my approved filtered list because it was too volatile, but on a special situation where I can override those criteria and get in, that's what we're looking at to happen, and indeed it has, and it started, and those are pretty good returns that I'm looking forward to. I'll just share with you some of the UK companies as well, because some of you have asked for it. So Jupiter Fund Management, that's flat to rising. Looks like it's going to go that way on a discount cash flow. And I've used a standard retail platform to give you this data. So, you know, it's not something you have to go out of your way to look for. There you go. That's undervalued. RWS Holdings, not the UK ones I don't hold, by the way. I hold the US ones, not the UK ones, because I tend to hold US stocks. RWS Holdings, undervalued, 47.3%. You can see some of the numbers behind that and what I expect to happen. Similarly with this, what I expect to happen is that to continue upwards, and that's what I'm expecting with that one. 66% undervalued in that case. UP Global Sourcing, similar kind of story. Now, I want to teach you something really important. See how that's fallen. Oftentimes, when the MACD kisses its moving average, it can fall off as some profit taking happens before going back up. So do not be surprised, and yet do not panic as that move happens. The undervaluation, 32% on a discount cash flow. Discount cash flow isn't written in stone, as it were, but it's worth looking at. Breeden, we see that moving up. We didn't just look at discount cash flow. We looked at valuations, revenue growth, dividend deals, and a whole bunch of other things. Look at that, 69% rather, undervalued. CRH, similar story, and 25.9% undervalued. AstraZeneca, well, you can see the direction. That's overbought and could and should probably do that. However, as we've seen in the past, there are periods where it can be overbought and still it rises. So be a bit cautious with this when I say not one that I own. On a discount cash flow, relatively undervalued. Some things there to look at. And finally, look at Robert Walters. Could do that. It's been going sideways. You might say, well, thanks very much, Alpesh. I'll leave that alone. And feel free, 77%. And you may well, as I say, leave that. So that's a quick stock market update. Don't forget to follow my LinkedIn and also follow me on Telegram, where you'll get more intra-week free education plus a heck of a lot more. If you look at alpeshpatel.com/links, you can download, well, some of the books you might have seen over my shoulder, which I've written. Those books have been translated into 8 different languages, including my book, Mind of a Trader, or Trading Online, which was an international bestseller, Net Trading, The Diary of an Internet Trader, all sorts of books on trading and investing, 18 of them in total, and you can download 2 of those for free from the links in my bio. For those of you wondering, as some of you occasionally do, why do you do these, Alpesh? Well, as I always joke, Elon's on Twitter, so I thought I'd be on YouTube and on TikTok. Listen, there's 100,000 people who want to see me do this, so that's why I do it. And the other reason is, if you look at the links on there, you will see I have something called Campaign for a Million, campaignforamillion.com. What that is to teach 1 million people how to be better at investing. So it's all part of the grand plan and scheme of things. Okay, thank you very much for your attention. If you stayed on this long, you are amazing. You get the gold star of the membership club. Also, when you look at the links, you'll see that I do a monthly networking in the city in London. So you'll get invites to that through my private Telegram, through my public Telegram channel, The private one's only for clients. And so if you go to alpeshpatel.com/links, you'll see the Telegram channel. I'll post on there when I'm doing my next meet and get together. Okay, thank you all very much for being on this video. Please do like and share, as I said. Thank you.